Hi there, afternoon. Welcome to this edition of Closing Trades. I'm Avan Dabash and with me is Aisha Faridi, and it's turning out to be a fairly tempered trading session as we're holding on to the 17,390 mark in trade. That's down 1% or so, pretty much continuing from where we left off in yesterday's trade. We're off, though, the low point of the trading session, and as we speak, the Sensex is down about 750 odd points. It's the broader markets too that are taking part of about 1% or so, and sectors like PSU banks, the Nifty bank index are under pressure. No wonder then you see the HDFC twins, ICICI Bank, all a big drag, and it seems like most of your sectors are trading in the red this afternoon, so nothing really is being spared the carnage. Be it rate sensitives, your defenses, all of those are under pressure. The PSB index is your big drag and the top sectoral loser. It's fallen the most since the 2nd of February, and no surprises then to see a whole lot of PSBs and those stocks under pressure. So take a look at the likes of an SBI, Bank of India, Canara Bank, PNB. They're all down and out in today's trading session, and it's extended as well to some of the other PSEs in trade. The likes of REC, Oil India, something like a BHEL or Concor too are down in today's trading session. So clearly a coat of red, Aisha.
Yeah, a coat of red. In fact, we've fallen in line with the rest of the global cues. And you know, the unfortunate and scary part is that Europe as well has started off deep in the red. So across the board, you are seeing nearly about 2% kind of cuts coming in. Of course, you know, this is tracking the US market movement, but sharp cuts across the European screen as well. It would be imperative to see how the US equities as well pan out tonight, because going by the pre-market rates and going by how the US futures are panning out right now, it seems like it's going to be another, you know, red day for US equity markets. The S&P futures are down about 0.5%. Dow, after that big fall overnight, is the futures are staring down another 200 points right now. Nasdaq a lot less tempered, a little bit soft, about 0.2%. So yes, I think in the interim or in the very near term, we're falling prey to the global cues. But a lot of stocks as well which are in focus. Equitas Small Finance, it's been seeing the biggest single day fall since May 20th. New almost 789 million shares are going to get listed, so that's creating a fair amount of supply as well. Tata Motors, though, it's been defying the market mood. That stock is holding up 1%. Tata Technologies, its subsidiary in which Tata Motors has a 72.5% stake, is going to be listing soon, and they've already filed the DRHP with the SEBI for a nod for an IPO as of yesterday. Jindal Stainless as well, that too is defiant in today's market. It's up nearly about 2% and they've guided for a 3 to 5% volume growth for the fiscal end and a 20% volume growth as well for FY24. So that stock is looking pretty buoyant as we speak right now. Let's bring on board then Kunal. We also have Andrew Holland joining in on the show right now, and a whole host of and Nishan Malkan as well on the show right now to talk about how the market is going to be moving. But Kunal, very feeble attempts at a recovery. We're still pretty much there where we were at the start, 200 points down.
Yeah, exactly. So we were discussing this in the morning, that how the market structure is very, very weak, and it's always better to try and either stay out when you're looking to build long positions rather than going contra at this point of time. I would still stand by with the same view on the indices, and I think it's not a time to venture into any kind of a contra long positions. Now, the only thing which has been a bit of an intriguing observation for the index today is right from the start, the 40,500 put option on the Bank Nifty has seen an incrementally high amount of writing. Now, that generally indicates that the Bank Nifty option traders are looking out for Bank Nifty holding on to that 40,500 mark. But the other way to look at it is that how has the components paired? So the likes of SBI, HDFC Bank, etc., larger cap names, prominent names from the banking stocks, these stocks are making intraday swing lows for themselves. So which means that it's just a distribution which is happening into the banking index. My sense is possibly by next week first half, we could not just break below the 40,500 mark significantly, but even fall a lot more aggressively than what we've seen over the last couple of days.
Andrew, good afternoon, and thank you for joining us. Andrew, just when it appears that markets are all set to go, you got something going wrong somewhere. Last month it was Adani. This month so far it's been global cues and risk-off moment. Where do you think markets are headed? What do you think will be the out of jail card for the bulls?
Yeah, it's I suppose there's two factors to that, Nikunj. Is one, I think the hope still lies in the fact that the Fed doesn't go for 50 basis points. I mean, that would be a good catalyst if that happened. But let's just say they don't, and obviously what we're seeing in the US is some of those problems starting to get into the banking industry, and usually it goes to the credit markets at some point, which is why you've seen bond yields fall so sharply globally. So either you have an event which brings markets down, and the market forces the Fed to start rethinking the higher interest rates for longer policy, because it will have an impact or unintended consequence, as we saw in China when they increase rates. So those are always the risk as you go higher of what those unintended consequences are. So maybe an event which is obviously never good news for markets might be the catalyst which gives us the opportunity then for the Fed to go and hold, and markets starting to reprice the risk again.
So what is the best way to deal with this kind of a sideways market, Andrew? I mean, this market in a sense is not giving too many pockets where there is momentum or where there is value.
Sorry, because I think I missed that question.
My question is that how should one cope up with this kind of a market? Because there are very few pockets which offer value or momentum. So either you need momentum or you need value. Currently, they both are missing.
Yeah, so we talked about this last time. The market's become kind of very rotational in terms of sector and then stocks, and I think that will continue until we get some better clues from the Fed later next week, actually. So in 2 weeks' time when they have their meeting. But I think until then, it's just going to remain this choppy, and it's going to be data driven. We're going to see some data out of the US tonight on jobs. That could obviously, once you look through the finer detail of wage growth and so forth, it could be seen as a positive. So I think those are the things that will keep the market highly volatile in the next month or so at least, until we get a clearer picture from after that Fed meeting. And I think that's the key at the moment. So I don't think momentum and I don't think value is going to work for you unless you can be very quick off the market, be very rotational. It's difficult to make money in these markets.
Vishal, hi, afternoon. Want to just get your thoughts in on, what the banks may be up to and what levels do you foresee in the very near term for the Nifty bank? And I'm purely asking because of the kind of, carnage which took place overnight, especially on some of the Dow banking names. And, pretty much across the globe, you are seeing the same sentiment prevail, where banks are the ones which are leading the fall for markets.
Hi, good afternoon. And I would like to point out one thing, that we should not look at this one particular day in isolation, right? If you look at the overall market, the low which we made on the budget day, which was on the bank Nifty around 39,500, 39,800 something on the futures, which has been retested in the last to last week. And again, it is coming towards that area. So I would like to point out that till the time we don't break that low, which has been retested multiple times, and it shows that there is a lot of support there and a lot of buying happens there. So I would only call the market bearish in the intermediate trend only when that low breaks. Otherwise, all dips are to buy.
Kunal, what is the importance of the budget day low or budget day level for the market? It's psychological or technically it is now of immense significance?
So it's technically also very important because I think we managed to just hold on 50 points plus or minus that 17,300 odd mark for the budget. So I think 340 was the low, 17,340 was the low. The Nifty has had hit on the budget day. We managed to just fluctuate, I think, 50 points plus or minus over the last one and a half odd month for the index, but we've not broken that level decisively. So, which means that there's been demand, buying support, etc., which has emerged at those levels. That's why I would believe that a break below this 70,300, 350 odd mark would be very, very crucial, because that would really puncture the bulls as such who've been trying to protect those strong support levels for the index, and which is why I believe that the next round of selling would probably happen only if we break convincingly below the 17,300 odd mark.
Right. Andrew, just wanted to get your sense in as well on this, whether or not you're worried about the fall in US equity markets and the kind of bearing and linkage it may have or cascading impact, if I can use that word, on Indian banks per se?
So I think there's a couple of points here. One is let's not forget that the Dow or the S&P are not so far away from their highs, overall. So I wouldn't get too overly worried about some of the pullbacks that you're seeing. And in Europe, even though you mentioned before that it's down today, again, some of those markets have been hitting new highs. So they're coming off a very, very strong run in the first quarter of the first few months of the year anyway. As for our banking sector, it'd just be a sentiment. I mean, obviously, you can extrapolate if rates are going higher in the US, then the RBI would likely follow. Would that dampen the kind of the credit growth that we're all expecting from the banks? But I expect that this quarter would be another great kind of return for the bank in terms of earnings growth. So I'm less worried about that. So it's a sentiment factor rather than it's a fundamental factor that you would have for the banks at the moment. So I don't think there's anything I would worry about on the banking sector.
Fair enough. Stay with us, Andrew. And for now, let's focus in on taking a quick break. And as we do that, HDFC Bank will continue to see high growth in their teens, says the CFO, Srinivasan Vaidyanathan, as there's a long runway for growth in the country and credit penetration is still below global averages. Listen in.
The beauty of this place is that the macro is that the consumer credit is very low in the economy, right? When you have the consumer credit penetration 20 to 30%, 20, 25%, that is, so you have a long runway for consumer credit to pick up, right? People aspirations have only gone up. People aspirations haven't come down. So if one has to be operating like a Western world in times to come, there's a long way to go. This has to double, triple to be at that kind of a level from a consumer credit penetration.
Sure.
So there's a long way from that sense.
I'm surprised that, there's also a point that your entity is being able to do it very well. But if you look deeper into the system, there are consumer durable companies which are telling us that some demand has, maybe you are mining your clients and your customers very well for the penetration part. I want to understand with you, there is a thought in the market about your bank, which has seen phenomenal decades of 20% plus compounding. And now the numbers show that at least the business growth on the top line front is kind of hovering around the 18% kind of a number. Whereas your NIM growth is very healthy, 24%, and many other parameters are upwards of 20%. So are we now seeing some moderation, and for foreseeable future, that's the new normal we are talking about?
See, if you go back, you have to go back in history to see what is the kind of rate of growth that we have experienced. You can look at any block of a 3 years or a 5 year blocks, right? A year or a quarter wouldn't tell you a trend, but if you look for a longer period, say 2012 to 17 as a 5 year block, 2.3, 2.4 times, essentially high teens to 20. That's the rate of growth, right?
Back with closing trades right here on ET now. More than what our markets are up to, one would want to keep a keen eye on what the US futures are trailing at, because while Europe, of course, has started off on quite a weak footing, almost 2% cuts coming in across the board, even the US futures are indicating some more weakness. So 0.5% lower pretty much across the board. Of course, a lot less for the NASDAQ futures right now at least. But there's one stock which is clearly defying all the market trend back home, and that's Tata Motors, and clearly seems that value unlocking is underway in the Tata Group. And Tata Tech has now filed for its IPO after almost a hiatus of 24 years, which was TCS back in 2004. You're seeing an IPO from the Tata stable. So let me take it across to Srishti and find out more about this. Well, yes, absolutely. After a long wait, Tata Group is coming up with its IPO, and this time it's a Tata Motors wholly owned subsidiary named Tata Technologies, a company which provides services to the automotive as well as to the aerospace division. But other than that, if we look at this particular company, wherein Tata Motors holds around 75% stake, and in this particular offering where Tata Technologies is offering 9.5 crore shares onto the table, amongst that 8.1 crore shares is set to be offloaded by Tata Motors itself. But the big question is that how much value does Tata Technologies hold, and in that what is the benefit for Tata Motors? So we get you the answer for that. Given the last buyback and given the last split done by Tata Technologies, the last price where the stock was valued for Tata Technologies was 198 rupees per share. And given the total number of shares that are being offered, the value of Tata Technologies is coming in at 8,000 crores. In this, 6,100 crores is for Tata Motors stake is getting valued, but Tata Motors is actually offloading 8.1 crore shares and not the whole 30.3 crore shares that they hold in this particular company. So Tata Motors is expected to get 1,600 crores out of this IPO. But do remember, this is as per the last buyback done by Tata Technologies. But during the course of so many years, the financials of Tata Technologies have improved drastically, and FY22 has been the best for the company. So that is what is expected for Tata Motors. They are expected to reduce their debt with this money that is coming in. That's all the market expectation is, but definitely a value unlocking from the Tata Motors side. But lastly, let's quickly have a look at the peer comparison. So among the peers, we have the companies from the likes of Cyient, KPIT Tech, Zensar Technologies being listed at the lower end of P multiple. Tata Tech is valued at 8,000 crores. At the higher end, value is at 16,300 crores. Well, let's see what the exact value comes in. Back to you. Right, Srishti, we leave it at that. There's a new appointment at Unilever, and that's in place of Sanjeev Mehta, whose tenure was, I guess, coming to an end. Rohit Java has been named as the new MD and CEO at Unilever. Stock not really seeing any much of a reaction. In the meantime, what is actually under pressure besides banks and clearly RBL and Canara Bank are the ones which are taking the maximum heat. There's Delta Corp as well. There's Intellect and Polycab, which has fallen about almost 6% as we speak. Within the Nifty, of course, it's Apollo Hospitals, SBI, HDFC Bank, HDFC, Indusine, Axis. Kunal, if at all, in this weakness in the banks, would you look to buy something?
Yeah, I think there could be few PSU banking stocks which I'll be interested in, specifically the mid-cap ones, the likes of Canara Bank, Bank of India, etc. If these stocks correct by another, say, 10 to 15%, for example, if Canara Bank comes back to, say, 275, 265 zone, Bank of India closer to that 70 mark or just slightly below that 70 levels from where it bounced off, those are very good levels, where I would probably be keenly looking to buy. Most of the other stocks, the buffer is quite high. For example, the likes of IndusInd Bank, the stock had made a low of 1,050, and the stock is significantly above those levels. So the buffer is pretty much high for those names. So I would stick to PSU banks at least as of now.
Well, this is succession planning, or you would say that Mr. Mehta's tenure was coming to an end, and Rohit Java is now the CEO-elect, if I may use the word, for India's biggest FMCG company, that's HUL. It was never expected to with stock market moving news, but it's a name in terms of the nomination which would be there. We'll try and get you more details on Mr. Java and his association with Hindustan Unilever, and what role was he in earlier and what role he would be now migrating to. But yeah, it's breaking news. You got an official announcement coming from HUL that Sanjeev Mehta, that Rohit Java would be succeeding Sanjeev Mehta from 27th of June. Andrew, when do you think is the right time to buy into some of these expensive consumer staple stocks?
It depends on your kind of time horizon for that, Nikunj. I think I would be looking to only hide in them at the moment where the markets are, and I think that's where you get the relative outperformance. As the markets kind of fall, but I just think for the time being, we're going to be in this range up until the Federal Reserve makes their decision known on the 22nd of March. So it's really just a place to hide in the very short term. I would just, if I was trying to deploy money at the moment, I'd just wait till the 22nd and then take a view from there, because that will give you a clue of where you think markets are going to go. Which sectors are going to be the best to be, to be riding through, either on the short side or the long side, because as you mentioned, valuations in the sector, but also for India, still remain relatively high, and you could see some earnings downgrades across some sectors in the next few months as well, because you are starting to see a bit of a slowdown in the growth in India. In the very short phase of the next few months. So those will play out as well, and obviously with the RBI likely to raise rates, this will just keep markets going to range bound for the time being, unless the Fed does something which is more drastic, either on raising rates or not raising rates as much as the market expects.
I'm just reading up on Rohit Java, the new man at the helm come the month of June at Unilever, and he currently holds a leadership role across sales, marketing, transformation, and general manager. He's currently the CTO, that's the Chief Transformation Officer for Unilever, with his current focus being the once in a decade end-to-end organizational transformation of Unilever. Before this, he was the EVP for North Asia and chairman for Unilever in China, where he was heading the business in one of the top priority market clusters, clearly. And when he was at Unilever China, he's worked in India, Vietnam, Thailand, Singapore, Philippines, Indonesia, China, covering all local, regional and global markets as well. So an old hand at Unilever, it seems.
Aisha, you must just take the clock back for HUL and talk about Mr. Mehta's tenure. And if you frankly ask me, the Indian FMCG sector has perhaps seen the biggest disruptive birth of a local FMCG company called Patanjali during his tenure. We don't realize it, but Indian FMCG sector, especially in company like HUL and ITC, they had to deal with the birth of Patanjali in the last 10 years. HUL margins, which were in mid-teens, they've gone now to mid-20s. That is something, if you frankly ask me, is the second big contribution. Third, the P multiple has just gone through the roof. In this entire decade, for the first time, HUL has had a commanding market share. And at a time when e-commerce and other disruptive forces were at play, they've had a very reasonable growth per se. There was a time when every FMCG analyst in the world was worried about HUL and Patanjali and the impact of Patanjali into a FMCG business.
Yeah,
but look what they've done.
It only opened the market further.
No, they were able to improve margins.
Yeah.
For a FMCG company, if you're able to improve margins, and when you are in a very sensitive market, and when you got ITC on one side, which is attacking every key portfolio of yours, you got Patanjali on the other side, that is important. Second, they acquired a big company, Glaxo Consumer, the GSK Consumer, yeah. They acquired that company. That got them the entry into the malt business. And that was a stock deal. That's the third important part, if I remember, during his tenure. I mean, I've had the pleasure of interacting with him a couple of times, and you could see that, his general view is that the volume growth in India is going to be higher than GDP. B, he also has been instrumental in premiumizing. That is whether Ariel Plus or Surf Plus, Lifebuoy Plus Plus. So there are a lot of these things which have actually happened in his tenure for a business which you would have said may have been a very tough business. Now he's currently currently the chief of transformation for HUL. We'll try and get you more details about Rohit Java, but since HUL historically has had leaders, or HUL has had historically leaders who've had a very global experience, I will not be surprised if Mr. Java also will be bringing on table a lot of global expertise per se. He's currently chief of transformation for Unilever in London. So very interesting.
Yeah, because he has worked in a lot of those global markets, as Aisha was also alluding to. Unilever China is where he's been, Southeast Asia, North Asia as well. So bringing on board that
You have to manage a global market, a key
Yeah.
portfolio, an emerging market in Southeast Asia. If you look at Mr.
then come
Mehta's,
to India.
then come to India, because India is a large market now.
Yeah.
I mean, for Unilever per se, HUL now is the biggest contributor per se, but he's coming at a time when the change which I think he has to really, convince the shareholders is the royalty charge. In the last quarter, I guess HUL came out and said, oh, we're increasing our royalty. And why are you increasing your royalty? I think royalty is going to go to 3% and then in phases. So this is coming at a time when HUL is actually going to be, they'll have to do some, they'll have to answer shareholders and analysts about the royalty issue and how the migration there would happen. Andrew, what's your view on this HUL royalty issue?
I heard him speak at one of the conferences. I mean, but as usual, they put it in a way that they are getting technology or know-how which has been spent significantly in Europe. So they're just paying a charge for that, which makes sense. I mean, if it's going to help your margins or your volumes or your new product development, then that's a key kind of leverage you have compared to other kind of say local companies in India. So I'm not too worried about those things because I think they've been very open about it. It hasn't been sneaked in. It's been said, this is what's going to happen. But obviously they'll have to give some more details on exactly what they're guessing for this extra royalty to excite the market that both revenues and margins are going to be positively impacted going forward. Or there's a new product line which they're going to be introducing. So I think if they could deliver that, then I think the market will be fine. It hasn't really kind of got too overly worried, as would have happened in the past with Unilever.
Okay, Andrew, great to have you on the show. We'll let you go on that note. In fact, we've also got commentary coming in from Nitin Paranjpe as well, who's an old hand at Unilever, or ex-hand, I should say, stating that Sanjeev, with his foresight, has led Unilever to become a high-performing and future-fit business. He's obviously talking about now Mr. Bawa as well, taking the helms there, saying that he has been an integral part of the executive formation of Unilever, South Asia Growth Agenda, as the president of the market cluster. We'll take a very
We've got a mild bit of recovery in Nasdaq futures. For Dow futures, it's almost break even. And for S&P futures, it's down by 9 points. Are we in for a good Friday night for US markets? And will it make it a good Monday morning for us? Would you play for that trade? A good Friday morning for Wall Street and a good gap up start on Monday morning?
No, so what I'm actually doing is looking out for stocks to go for a contra buy rather than index, because then it will still be a bit wobbly because which side the US markets would tilt at the end of the day is very, very difficult to preempt. And in case if the global markets say close on a positive note, and if we gap up by say 0.5% as well, that would probably be a confirmation that we've again tapped into a support zone. We've bounced off, so which means that reestablishes the view that the markets are still bouncing off from those major supports of 17,200, 300. So I'll wait out for one more day on the index, but yes, stock specific, there are a lot of opportunities to buy.
So hypothetically, if we tap this time again at 17,003 and go right back up, the problem is that while we're tapping lower, we're also not cracking the upper end of the range. So what does that do? If Monday, if it's a decent Monday, what does that do for the charts?
So eventually what happens is if the support remains constant and even if the resistance fall, but at the end of the day, even after 3 or 4 tests of the supports, there is bound to be that the resistance would be taken out.
You'll play for the upside.
So I'll play for the upside in case if the supports don't break.
तो फेविकॉल की दीवारें टूटेगी नहीं, right? जोड़ अच्छे से लगा हुआ है.
फेविकॉल का जोड़.
No, I mean, just think about it. You've just gone into a year where you can just count I mean, I can imagine a scenario that whatever could go wrong has gone wrong. If I would have constructed a scenario 5-7 years ago that a corporate group, which is India's second biggest corporate group, has seen a nosedive of 50% in terms of market cap, then predict the market level, the guess would have been 15%, 20%, 30%, right? Now what do we have? We have a market which has frankly remained flat. Second ingredient, FIs have been net sellers of $1 billion plus for this entire 3-month, 2.5-month period. Guess the market level lower. Inflation is higher than what we thought at the beginning of the year, predict the market level. All the factors which have, in a sense, occupied headlines are negative factors, not even a single positive factor. And yet markets are not in a free fall zone. That's my limited point.
Yeah. Okay, we have Dhananjay Sinha also joining in on the show right now. Dhananjay, would you agree with Nikunj that it just shows the sheer resilience of the India equity markets, the fact that quite a few events which one would think would be carnage for markets, they've not really managed to shake them so far.
So I think the resilience in the Indian market essentially, is dependent on the fact that the expectations on growth in India is pretty optimistic. I would say people are still expecting 7% GDP growth. If you look at the earnings expectations for Nifty, it's still about 15% growth for this year, and the following year about, because there's some downgrade, roughly about 20% next year. So after a 40% expansion in earnings, expectations of a fairly robust or reasonably good growth relative to the rest of the world is still very much there. So if you look at the ranking, we look at a ranking of about 26 indices across the world. I think in terms of expectations on earnings growth, it is fairly on the top list. So I think the expectation growth is essentially holding us up in terms of the resilience. There has been sort of a flattishness of the market over the last 1.5 years. So Nifty is about 17,400 something now. I think 1.5 years back it was similar level. So I think it has just stuck around there. Whereas let's say the US markets have corrected, etc. So that is the thing. But what we have to really look at is whether so if you look at the valuation in this 26 indices that we're looking at, India would be lowest in terms of relative valuation. So it's very rich in terms of relative valuation. Yeah, about 50% higher than the average in terms of the average PE ratio that we're looking at. So I think any miss with respect to earnings expectation, for the cuts in earnings in a context where global rates are going up, I think and there can be a downside risk to valuations, and along with expectations of fairly reasonable cuts in expectations in expected earnings going forward. So we are expecting about 15 to 20% cut this year. In FY23, Nifty earnings have been cut by about 10%. For non-finance companies, it has been cut by about 16 odd percent. So banking sector is something that has up counterbalance the non-banking sector. But my sense is that going forward, the banking sector could be at risk in terms of the earnings expectations.
Speaking of the banking sector as well, this week it's shaved off about 2% or so, but it's been real estate that has been the hardest hit for the week gone by, at least 3.6%. IT has lost out about 1% for this week, while energy has been the sole sector that's managed to eke out gains in the week gone by with a close to 1.8% return. But interesting names as well on the charts, and Arpit Beriwal is joining in as well on the technicals. Maruti has seen a smart recovery from the low point of the trading day, clutching onto the 8,600 mark. There's Cipla as well that has managed to bounce back, something like a Shree Cements as well as a notable pullback. Arpit, let's get in your take on these three stocks.
Yeah, very good afternoon. So first talking about Maruti. So Maruti overall, the auto sector has been sideways for many weeks. Now talking about Maruti. So Maruti overall, it has on a weekly scale, it has been sideways between 8,400 to 8,800. Now it is again taking support near 200 DEMA. So overall, looking at the chart structure, the upside is capped, but on the downside, 8,300 is a major support, whereas on the upside, 8,850 is a major resistance.
Okay. Dhananjay, when you say that earnings are not looking that, and earnings risk is there, but last 2 quarters only earning cuts have started. So some would say the fact that earning estimates are getting revised on the downside, it is something which is an ongoing process. It has already started 2 quarters ago.
Yeah. I think when we expected earnings to be cut, it was last year. And we are talking about February of 2022. We were saying that the projected earnings for Nifty would be cut by about 15%. And we have seen that it is in the process. So if you look at the analysis of quarterly results that we have done at an aggregate level and at sub-sectors level, we have seen that, and what is noticeable is that most of the indicators are to fall. If you look at beyond the Nifty, set of companies, you look at larger companies of over 2,500 companies that we've looked at, what we found is that the absolute level of sales have actually started to fall, not just for the commodity sector, but across multiple manufacturing sectors. That is translating into a lower utilization of labor costs, of raw material, and such as for taxes, depreciation, etc. If you look at that, all those things have actually to fall. But what is also happening alongside is there is a sort of 30% growth in interest costs. I think the whole deleveraging that we were talking about after the COVID and the post-pandemic, I would say the bounties that we got is actually reversing. So you have a scaling down of operations and rising interest costs having a significant impact on the profits. So the profits have also contracted both at the operating profit levels and also at the net profit level. So I think that's a very important thing to really look at. We are saying that this thing might actually continue going forward because companies will start to focus on productivity, efficiency, margins, etc.
We're getting a slight trouble with your audio. I'm just going to get back to you and get that sorted. Let's just take a look at what the market is settling in at, because clearly while banks are taking a tumble, we're now down 190 points. So a feeble attempt at a recovery, considering that we were, much worse previously in the day. 1% lower is where we're currently at, and the spot Nifty has managed to resurrect itself back at that 17,400 mark. Tata Motors clearly is your big winner today. There's BPCL also, which is holding out. ITC has somewhat now flattened out and it's covering. That stock is relatively resilient. Bajaj Auto, Unilever, Britannia, although one must say that these are not your high-weighted stocks for sure. But yeah, so far they're looking okay as opposed to the rest of the market. But deposit growth is not moderating. That's the word coming in from the HDFC Bank CFO, Srinivasan Vaidyanathan. In his first TV interview ever, he remains pretty optimistic about growth prospects. Let's listen in.
So before I come on the retail part of the loan book, I want to understand how is the corporate end of the loan book behaving in terms of their behavior towards fresh credit, be it your SME kind of book, rural book, and of course the corporates. Because the fact of the matter is that rates in the system have edged higher, and from now also it likely to edge higher. So what kind of conversations are you having?
The larger the corporates, they come with the rate view, because professionally managed money managers who are there in the corporates, so they have quite a view of where the market is heading, the rates are heading, and so there's intense discussions that will happen in terms of the credit. But working capital is something, as I said, is inevitable and people have to finance. And from a project financing, it takes time, over a period of a longer term it comes. But good demand on that front, and people, it is not as interest rate sensitive from a working capital credit offtake, because ability to pass on is important, and that happens at both the SME level as well as on the wholesale level. People are able to pass it on. So that's, and then when they pass it on, does it impact the consumer spending at the end? It is reflected in the price of the goods and services at the end. Is it reflected there? It is. Does it matter? Does it matter to the overall economic growth? It hasn't. India is a high interest rate country for most part, right? Operating at a 6% to 8% kind of an interest rate is not something that is new in the country. Over a longer period of time, that's something we have seen that. And over this kind of period during those interest rate regime, the growth rate has also been very robust.
Sure.
And so that's part of how the economy has been functioning very well.
You have a very large part of your loan book now on the semi-urban and rural side as well. And there's again and again this argument coming on the table that there's a K-shaped recovery in the economy. Perhaps the lower end, inflation and higher rates both have been pressurizing the lower end of the customer or consumer. What are your thoughts on rural and semi-urban smaller ticket?
See, it is absolutely right that the K-shaped recovery is something that is visible and one sees that. But our banking customer target segment is above certain customer segment level. So we're not experiencing directly that particular segment which is impacted. It is true that inflation disposable incomes are less at the lower levels. So that is part of the impact which is there. And coming out of the COVID, the most impacted customer segment from COVID was that segment, where the jobs were less, or daily earners or the weekly earners, so the impacted people who are there. So now coming out of that, whereas even in the semi-urban and rural that you alluded to, where 60% of the country is, our target segment is not all of that 60% of that rural India which is there. We are interested in the top 20-30% of that 60%.
Okay.
That is our target segment, which means the top end of that segment in the rural, semi-urban and rural, where they continue to have good disposable incomes and cash flows.
So we saw that in the quarter gone by, your interest income, there was a 13-quarter high kind of growth. And now people are also, though a lot of shareholders who have logged in, because there was a very long wait also, the stock did not do very well in numbers. So people who are patient are getting rewarded now. But they're also kind of little worried, can this growth rate sustain? You see any reason to of that question or worry arising, or up till now the visibility is that it may sustain?
See the visibility in terms of what I would, rather than look forward to say where it is, I will look backwards, is to say that as a bank we have consistently performed in terms of having a balance of various products across segments, right? That suits the products are there that suits the economic growth across various segments.
That's the view coming in from HDFC Bank. Moving right on, just checking in on some of the interesting movers for the week gone by. It's of course Adani Group stocks that dominate that list, but that aside, JSW Energy has shot up about 11% or so. There's been Max Healthcare that's been in the limelight on the upside for the week gone by. Power Finance Corp, Hindustan Aeronautics, GAIL, and even something like a Cummins India has seen traction. Let's get in a view on the charts. Kunal, HAL, GAIL India, JSW Energy, what do the charts look like?
So I think HAL is looking very, very attractive on the charts. The stock made a fresh 52-week high just about a few days back, bouncing off exactly from its 200 moving average. So that was a sign of strength coming back for HAL. From the other names that you mentioned, some of the stocks which I've been liking from the defense pack have been BEL, for example. That stock has been more sideways. JSW Energy, and that's a very interesting stock because from 2020, the stock which was at 2 digits, I think 67, 77 approximately, moved up very, very quickly towards the 300 plus 300, 400 zone, and then from there on the stock has gone to a time-wise as well as a price-wise correction. So I think it's a good opportunity to try and look at even accumulating JSW Energy from a more medium-term to long-term scale.
Time for those BTST trades then, and let's find out what exactly our chartists are picking out for the day. Kunal?
So I'll go with a couple of buy calls from the stock-specific front. So two buys. First one is one Aster DM, the stock forming a triangular pattern breakout, very close towards the breakout point. So would anticipate the breakout, targets of 248. Stop loss to be kept at 224. And Bector Foods has been one of the stocks which I've been recommending over the last 1.5 odd months. Looks very attractive on the charts. Made a fresh 52-week highs today. So would suggest a buy, targets of 600, stop loss at 544.
All right, watch out for some of those interesting recommendations. Arpit, let's get in your BTST trades.
Yeah, so we have one buy side and one sell side. So within buy side, we have the NTPC. So talking about the NTPC chart, the monthly and weekly setup is quite strong. It has given a daily breakout above 177 levels, and we're expecting 3 to 4% upside move. So at current level, one can buy with keeping stop loss of 176 for an upside move towards 187. Whereas on the other side, we have a STPT trade on Lal Path Labs. So looking at the overall chart structure, it is on a downtrend. Monthly and weekly setup is quite weak. Daily, it has given a fresh consolidation breakdown. So till it holds below 1880, we can expect downside towards 1760. So one can short at current levels with keeping SL of 1870 for a target towards 1760 levels.
We're revisiting some of the Path Lab stocks. They were like the real heroes, and now the tide has really, really reversed. Actually, look at Dr. Path Lab, Thyrocare. I can throw in a Metropolis. They're off what, Kunal? 30, 40, 50%, right?
In fact, from 4,200, for example, Lal Path Labs, it's at 1,800.
More than 50%.
More than 50% is a correction.
Thyrocare, the company was acquired at, I think, 1,300 rupees.
Correct, 1,400 rupees, and now the stock is at 478.
And what about Metropolis?
So
Yeah, he got a clean exit.
Mr. Velumani
Mr.
really got
Velumani
it
got a
right.
clean exit. I mean, he really mastered the art of... See, any businessman who's not emotionally attached to the business is in the business of creating a business and then selling at the right price. So he sold Thyrocare at a price at which that price has not come again. However, he also invested his personal money in PharmEasy, the company which was supposed to go public. And then we know the company which has acquired Thyrocare is not going public. So on a personal front, while he got 2,000 crore cash, another 2,000 was also put in the stock of PharmEasy. That time it appeared that these NetMeds and the PharmEasys of the world will go public because everything was getting digital, from Sabjiwala to Dawaiwala. Everything was getting digital because that was the COVID time. Now the realization has kicked in. I think what's happened with Thyrocares and the Dr. Path Labs of the world is that there was a COVID rush and everyone thought, okay, COVID rush is something which is going to remain permanent. Then the assumption was that, okay, COVID RT-PCR rates are capped. So there is no upside which you will get even if COVID tests go away. What people don't realize, or what a lot of Janta did not realize, was that along with an COVID RT-PCR test, you were doing also some other test. Those were the tests where the price cap was not there. And I guess that is the most important aspect, so to speak. 2 minutes to go for the market to close. And we just about, there you go, there you see. The price of Thyrocare, it's just been a complete disaster, so to speak. Dhananjay, before we wrap the market, would you be now a contra buyer in any of the diagnostic stocks?
I would still wait. I would say that, I think a lot of correction has happened. And I think, as you are right, I mean, you have said it, I think the whole, pandemic bounce that was there, that has actually gone away. I think, we are sort of looking at the healthcare space and now because of the valuation that has happened, I mean, the valuation that has emerged. So we will start nibbling into the pathology space, as you mentioned. One can consider this. Yeah.
Okay, let's begin winding up for the day. Dhananjay, good to have you with us. Kunal, I know lots is going to change when we come back for trade on Monday morning. But right now, the futures, US futures that is, are scaling lower. 0.5% is the downtick on the Dow. Assuming that this is where it remains, I know it will not. What's it looking like?
Well, if
for the index?
Yeah, it will look a bit tricky because I think we've not yet confirmed a break below that 17,200 mark. So I'll just wait out for that technical or academic confirmation that the index has fallen below that 17,200 mark. That's where I think aggressive shorting can probably be a stance or a strategy for an index perspective.
Okay, let's begin winding up for the day then. And for the week as well, let's see how we've done. We've fallen 1.25%, but we managed to take support at the 50 DMA for a second consecutive week. 32 out of the 50 constituents of the Nifty have managed to decline this week, the largest amongst the lost being Bajaj Finance as well as SBI Insurance, life insurance that is. They've dragged the most. Over 60% of the Nifty mid-cap constituents declined. Dr. Lal Path Labs, Bank of India have been leading the losses. Small cap index again has taken resistance at its 50 DMA with names like RBL, Intellect, Design, declining the most. And it was PSU Banking Index, which was down over 3.5% this week, was the top sectoral loser. And all constituents of the PSU Bank Index declined this week. It was IOB, UCO Bank, which actually led the losses. Nifty Pharma as well managed to hit a 23-month low. Realty was down 3.6%. FMCG index declined for a third straight week. Nifty Bank was down over 2%. Bandhan Bank and PNB leading the losses there. IT as well was a drag, declined for a third straight week. Coforge, Persistent, they all led the losses. And same was the case with metals. It's only energy which saw a second straight session of gains. Adani Transmission and Adani Green leading there, but that was a different kettle of fish. They're also recovering from extremely oversold territories. Okay, that said, we managed to defend the 17,400 print for now. We're going to wind it up right here on this edition of Closing Trades.